Hey everyone, so let's talk about the AI revolution. It's changing everything, right? But it's got this dirty little secret. It is incredibly, almost unbelievably hungry for electricity. I mean, we're talking about a level of demand that's pushing our power grids right to the brink. So today, let's dig into this massive energy problem and look at two companies that are battling it out to solve it.
Okay, get a load of this number. 1,700 terawatt hours. That's what some projections are saying data centers alone could be using globally by 2035. Now, to give you some perspective, that is more than the entire country of India uses today. This isn't just a little bit of growth. This is an absolute explosion in demand.
And that, of course, leads us to the billion-dollar question. Where is all this power going to come from? I mean, our traditional power grids are already creaking under the strain. This power gap has become the single biggest bottleneck for the entire AI industry. Think about it. You can have the fastest, most powerful chips on the planet, but if you can't plug them in, they're just really, really expensive paperweights. So first things first, let's really unpack this AI power problem and get a handle on the scale of demand we're talking about. What we have here is really a perfect storm. You've got the AI and cloud boom, which requires these incredibly energy-intensive servers. And then you have to cool those servers down, which can suck up another 40% of the total energy use. It's just massive. But here's the key takeaway. For a long, long time, energy consumption was pretty flat. Well, that era is over. Done. We are officially in a new age of explosive, nonlinear growth. But a huge problem also creates a huge opportunity, and that's where on-site power solutions come in. So let's meet the two main contenders in this space, FuelCell and Bloom. On one side, you've got FuelCell Energy. They're kind of the veteran in this space, trying to pull off this big turnaround. Think of them as the high-risk but maybe high-reward bet. And then on the other side, you have Bloom Energy. They're the established market leader, they've got big-name clients, and they have a clear path to actually making money. This is your classic David versus Goliath, the speculative gamble versus the stable, safe bet.
So, what's actually different about these two companies? Well, it really all boils down to the core technology humming away inside their fuel cells. It's a real head-to-head showdown.
And right here, you can see the key trade-offs. Bloom Energy's solid oxide cells. They run super hot, and they achieve this stunning electrical efficiency, up to 65%. That's a huge deal for places like data centers that need reliable power. Now, FuelCell Energy's molten carbonate cells, they have a lower electrical efficiency, sure, but they have a secret weapon. Just look at that last row, something called CHP. So what the heck is CHP? Well, think of it as the ultimate recycling program. Fuel cell systems produce a ton of high-quality waste heat, but instead of just letting that heat drift away, CHP captures it and puts it back to work. For instance, it can power chillers that cool the data center. And this is a huge advantage because remember, cooling can be 40% of a data center's entire energy bill. But don't think Bloom is just sitting on its hands. As you can see from this quote, their CEO is laser-focused. They are building their systems specifically for data centers, trying to optimize what they call the watts to flops ratio. It's all about getting the most computing power, the flops, for every single watt of electricity you use. And they're using that pitch to win over massive clients, like Oracle. Okay, but the technology is only one part of the equation. You gotta follow the money. So let's dive into the financials, because that's where you find the real story. Let's start with FuelCell Energy. In the third quarter, they reported a whopping 97% year-over-year increase in revenue. Now, on the surface, that looks absolutely incredible. I mean, nearly doubling your revenue, you'd think they're knocking it out of the park, right? Well, hold on a second, because in that very same quarter, they posted a net loss of $92.5 million. That's a huge, ugly number that seems to completely fly in the face of that amazing revenue growth. So what on earth is going on here? All right, so you really have to dig past the headline number to understand this. That giant loss was mostly because of a one-time accounting charge that wasn't even cash. Once you strip that weird stuff out, the picture looks a lot different. Their gross loss actually went down. Their adjusted EBITDA loss improved. So what this suggests is that the core business is actually getting healthier, even if that final number looks pretty scary. But let's not lose perspective here. This chart really tells the story of scale. In the last year, FuelCell brought in about $112 million in revenue. Bloom Energy, $1.63 billion. They are just playing in completely different leagues right now. And that massive scale is translating directly to the bottom line for Bloom. Unlike FuelCell, Bloom is already showing that it knows how to be profitable. They actually reported a positive operating income, and get this, their service business has been in the black for 6 straight quarters. This isn't a turnaround story anymore. This is the story of a market leader just executing its plan. So we've looked at the market, the tech, the financials. After all that, what's the final verdict? Where do we land? It really brings us back to those two very different paths. FuelCell is the speculative play. I mean, if they pull off this turnaround and land a couple of monster contracts, the upside could be huge. But they're paying the bills by selling new shares, which waters down the value for existing investors. Bloom, on the other hand, is the de-risked leader. Yeah, you pay a higher price for the stock, but you're buying into proven scale, actual profits, and validation from the biggest names in the business.
So, based on all the data, the conclusion from the source material is pretty clear. Bloom Energy looks like the more compelling and, frankly, more sensible investment opportunity. While FuelCell has some really cool tech and a lot of potential, Bloom's financial strength and its dominant position in the market just make it the more stable choice right now. But that does leave us with one last really fascinating question to chew on. In a market that's growing this fast with a problem this big, is the future going to belong to the stable, proven leader? Or is there still room for a high-risk innovator to stage a comeback and grab a piece of this absolutely massive gigawatt-scale opportunity? One thing's for sure, the AI power crunch is just getting started.